Hi everyone, I hope you're all doing well, and today I'm going to be talking about 3 stocks that I actually bought towards the back end of this week. Obviously a little bit earlier on in the week I was buying a few stocks. I think I made the video about buying 5 stocks, and now I've also bought another 3 stocks. So I'm making this video on the weekend just to update you guys, which I don't normally do videos on the weekend so for that, if you could smash the like button, that'd be absolutely amazing. And one of them is a brand new stock, 2 of them I was adding into positions, and I wasn't really planning on buying them. It just got to the point where I was like, these deals are like fantastic. Like, we're starting to get to easy money stocks, and I was like, I'm just going to top into these a little bit more. And like I said, one of them was dropped so much that I was like, I'm going to have to open a position into this one. So I did do, and I'll be covering the reasons why I added into these 2 stocks and why I bought into this new stock. What I've also done is I've left the letter of the stocks that I did buy on here. So once again, you guys can have a little guess and see what you think they are. It's a little good game show we've got going on here. You know, maybe one day we can have our own YouTube channel that is Guess the Stock or something like that. So yeah, if you want to have a go at guessing them, you can have a go. So we'll start off with number 1. So number 1 was National Express. So this is my new stock into my portfolio, and I said on previous videos, like, I really wasn't planning on getting into this stock. But eventually the prices, it's like, you know, one of those where your mates ask you to go out and you're like, no, I'm not going out tonight. And they keep asking you and you're like, eventually you go, yeah, go on then. It's one of those where you just cave into the pressure, and you're starting to look at this and you're thinking, this stock is just getting to really cheap valuations. And I actually read the earnings report, I think on the weekend before, when it reported its earnings. And I was like, this is, you know, pretty decent deal that's starting to go on here. And it wasn't one that I really wanted to get into, just because, like I said, I'm trying to build up my cash position a little bit now. And also I already have a lot of exposure to this kind of industry, you know, this travel industry, which could be very volatile depending on what happens with certain cases of lockdown, for example. And obviously, you know, I don't want to have my portfolio in that too much of a risk, but you eventually get to a point where you're like, some of these stocks are just going to, you know, it might be a rough year, and it might be, you know, you're going to probably have to stomach a little bit of volatility. Your stock going down a little bit on the short term, right? But when you think about some of these companies, and this one especially, like when you think about 2 to 5 years down the line, where is this stock going to be? It's not going to be at these prices. It's definitely going to be probably, you know, probably 100% up from here, maybe even more than that. So it was one of those where, you know, I got the carrot dangled down in front of me for so long that I was like, I'm going to have to go for it. So yeah, I did add into, well, start a new position in National Express. So the ticker for this one is NEX, and before COVID it was trading around about the 438, 450 mark. Then it had a massive drop, 70-80% drop from there. And then actually from the COVID lows, when it got down to about 105, the stock actually went up about 150%. So there was a massive gain on the stock. So if you actually bought in them COVID lows, you're probably still up a decent amount on your stock. And then pretty much since May, when it got to about 270, and even then it climbed up a little bit in June, which was about 240. The stock's, you know, dropped, and from there it's dropped about another 50% from about its June level. So you can see this stock actually was one of those that you probably, you know, say that you missed the boat on, and it's just had, you know, a massive decline recently. And I was looking at it now and thinking, it's only a little bit above its COVID lows. Surely it can't go back below its COVID lows now it's operating. And it's one of those where I'm looking and think, you know, earlier on I missed out on a 150% gain, and then I've got an opportunity now to actually go buy it at pretty much its discount again. And I'm looking at this one and think, this is an easy, you know, I think even in a year's time, this stock probably be going in back into that 260 range. So even though I invest for 2 to 5 years, I'm looking at this company now and thinking that maybe even in a year's time, this stock's going to probably 100% return. And when I start talking about 2-3 years down the line, these sort of prices, you're talking potential for like 300% return, which is absolutely crazy. Now obviously the earnings came out, and this is probably one of the things that gave it its leg down. But actually when you look into the earnings, they weren't actually that bad. You look into the earnings report and they go on to say that in January and in February, the year actually started really strong before the coronavirus. I think it says that the revenue was growing about 17%, which is pretty decent. So pretty strong. You look at the earnings, the debt hasn't rose loads. Obviously they did make a loss, which we were kind of expecting when obviously a lot of the major transports were shut down, but they're starting to, operate again. The big standout thing was actually the German rail growth was actually pretty strong. But yeah, we did have a decline in the kind of like revenue everywhere else in America, Europe, the UK, which we kind of expect. But like I said, I think eventually, that probably will start coming back probably next month, in my opinion. And the thing, like I always say, when you buy a lot of these companies that are being affected by COVID, you've just got to look at the balance sheet and work out, was it in a good place before COVID? And you look at, the growth on National Express before COVID, and even in this earnings report, January, February, fantastic growth. So it was doing well before COVID. And you look at the balance sheet and you look, is it in a strong position? Now, National Express wasn't exactly an amazing position because it had a bit less cash to debt, but you still look now and you think, it's about 600 million in cash. The debt is about 1.5 billion. 600 million cash to burn through. At the moment, I think it's losing something like 200 million in cash every kind of 6 months. And obviously, that's the worst part of it. So you think when more and more travel starts coming back, the amount of cash that it's losing will be less and less. But let's just say it stayed at losing 200 every kind of 6 months, which it won't do, but let's just say it does. That still gives National Express about a year and a half of life, which is pretty good. In a year and a half, do you think COVID and transport is going to stay the same, or do you think it's going to increase? I think it's going to increase. So it's got a year and a half of life, worst case scenario. And I think losses wise, I expect them to, over the next 6 months, to definitely not lose as much as what they previously did because they were hardly operating. So it looks pretty strong from that point of view. And one of the other negatives that I did really have with this company, and it's probably one of the reasons why I didn't invest in it early on, is that it did have a CEO change. So the current CEO, which I think is Dean Finch, is leaving and he's off to Persimmon. So like in this sort of time, I really wouldn't want to buy a company that's having a management change, especially like a CEO. That was the only negative with the company, and that's probably one of the things that did put me off buying it earlier. But when you look at it, the management team is pretty much staying in place. I believe the CFO is the one that's stepping up to CEO. So you're still having someone that's been in the company for a very long time, taking the reins, which is a positive. So yeah, that was the only little negative. But overall, like I say, I thought it was a pretty decent earnings report. Especially when you look at that January, February revenue growth of 17%. Pretty good in my opinion. So number 2 is Hollywood Bowl, and this is definitely the one on this list that I was like, this is just free cash, like this is just free money. You're giving me easy money to make on the stock market on this one. I'm a big fan of Hollywood Bowl, consistently previously been a very fantastic company on the revenue side of it, the profit side of it, and it's a business model that's just so easy to get your head around, and then you go like, oh yeah, that's actually why the share price is going to increase. You look at the stock, the ticker symbol is BOWL. The stock's tanked absolutely loads. And you're picking this up at prices that were, ages ago. It's a very sold off stock. And it's a company that's now operating again. So hopefully, that's the balance sheet sorted. I mean, it had a decent balance sheet going into it, which is why I was very comfortable buying this stock. And now that it's operating again, I'm kind of looking at this thinking that it's probably not going to need to raise cash because it should break even how it's operating. But you look at this company, it's got obviously the bowling side of it, it's got the arcade side of it, and it's also got the bar side of it. So it's a bit of a diverse revenue there. The locations that these places are in are absolutely fantastic. And you think about Hollywood Bowl, and at the moment I think it has something around about 60 centres, maybe a little bit higher, but it's in the 60 range. And when you think about Hollywood Bowl and the plans over like the next 5 years to open like another 10 centres, you think, well, if they're opening another 10 centres and they're going to be successful as like the other centres, which by the way, all the other centres at Hollywood Bowl are profitable centres, pre-COVID obviously, that's sort of changed over the last few months. But yeah, when you look at what they're doing and when they open up more centres and how well they've selected the centres previously and the more make a profit, if over the next 5 years it's going to be increasing its amount of centres by quite a bit, then obviously that's going to increase the profit, the revenue, and then also it will lead to a dividend and paying its dividend back out. So over the course of a 2 to 5 year spectrum, when you look at Hollywood Bowl, this company's in a pretty decent position in my opinion, and like I say, I think this is one of the ones that now is just easy money. And I'm like, we saw what happened when it reopened, the stock spiked up, and I was kind of like looking at this now going, this is probably like, that's it now, Hollywood Bowl's gone, it's one of those that you probably missed the opportunity now. But over the last few days it dropped, and it dropped like 10% as well. It lost kind of like a lot of them gains that it had off the news of it being back open. And I thought, wow, like this is an absolute opportunity here. So for me, when I saw that opportunity of that drop, I thought this is one that I'm just going to top up my position in, and I think I increased my position on Hollywood Bowl by about 20%. And number 3 is gang stock. So if you guys were checking earnings out on Thursday night, you probably saw the drop on this one. And obviously I saw the drop and I was like, that's not a bad thing, we get the stock at cheaper prices. So I thought, I'll buy into this one. Obviously I had to read the earnings report just to make sure there wasn't anything negative on the stock. But yeah, it was dropping like 13 to 15% after earnings. So I thought I'll have a look in this one. And someone on my Discord group, by the way, guys, if you want to join my Discord group, it's where I always post, like I was posting about gang stock and saying about their earnings and that I was going to buy anymore. But yeah, on the Discord group, someone actually said that gang stock has actually come on Trading 212 now, which is another positive because now I can put it on my ISA rather than actually putting it on my DeGiro account, which isn't in an ISA. So that was some positive news that we got as well. But yeah, the gang stock obviously drops quite a bit. And I have to say right now at the valuation is that you are paying a bit of a premium right now because there's just so much expectation over the sector that it's in, that there's that massive growth potential, Well, we did look into the earnings and you see, the potential and why it does trade at a premium. You look at the revenue growth was 100% year over year, which was fantastic. Not how many companies grow 100% revenue year over year. Some fantastic numbers out by gang. Now the EPS missed, but I think that actually Wall Street got the expectations wrong. It said that it missed on the earnings, but actually it didn't count in the fact that it had to IPO on the NASDAQ. Which obviously costs money because you've got all the fees and solicitors moving your shares across and everything like that. And if you actually take the IPO cost off the earnings, they would actually have beaten earnings. They would have come in at a profit by, I think it was 1 cent. So the earnings would have pretty much been in line. It would have made a profit. And also, you look at the revenue growth, 100% year over year growth was absolutely fantastic. Looking into the actual earnings report, the cash was actually multiplied by 6, so the cash pile grew absolutely huge because of the IPO listing, which was fantastic. So the company has a even better balance sheet now, and also when you, like I say, we talk about the loss of the IPO, that's a one-time thing that's obviously sorted right now. And obviously from an investor's point of view, being on the NASDAQ brings in a lot more potential of other investors in America where this stock is getting really hyped up on. Looking into the earnings as well, the tier 1 client is expected to get announced around about Thanksgiving, so we've got a little bit of news on that one. On the actual conference call, the CEO got asked a few questions. One of them was the loss of one of the customers, which was about 3 million revenue lost, but they're still keeping the casino side of that customer. But the company also did say that it does not change its outlook for the rest of the year. So the forecast on revenue side didn't affect it. They just said that because we expect that we're doing so well for everyone else, it'll kind of cover that loss. So that was totally fine. Obviously, there's a few other clients that have been announced recently as well, which will help revenue. And also they went on to say that in that revenue forecast, it's actually not including, because obviously online gambling, casinos isn't allowed in like every state right now. It wasn't including Michigan, that will probably get added towards the back end of the year. So it was kind of saying, look, we are kind of sandbagging our numbers a little bit. They're actually probably going to be better than this, but because it's not guaranteed, we can't actually include them in the numbers. So overall, like the numbers and the forecast was pretty good. I think people were spooked by the EPS miss, which kind of, if you look into it, you can obviously see that was because of the IPO cost, and also I think because of the customer loss as well. But like I say, overall, didn't really change the company outlook at all. They're pretty confident that because the company's doing so well, they'll be able to make up that customer loss. So overall, pretty good earnings from my opinion in gang. And if I'm honest, I thought the stock probably should have gone up after these earnings, but maybe it's one of those that it's just priced a little bit of perfection, and because of the little negative news, it's kind of spooked a few people. I say the same thing about Tesla. You know, Tesla's one of those that's priced at perfection now, and it's one of those where if you have a little bit of bad news, it might spook investors, and then we might finally see the drop in Tesla stock. So those are the 3 stocks that I bought anyway this week, guys. I hope you enjoyed the video. As always, smash the like button if you made it through to the other side. Subscribe if you're new around here, and I'll see you in the next video.